What up, brother? Good afternoon, black people. How you all doing tonight? Thank you all for being out. We have a very, very smart and talented panel up here today. Won't take too much of your time. I'll start off by introducing myself. My name is Isaiah Jackson. I'm the co-founder of KRBE Digital Assets Group and the co-host of the Gentlemen of Crypto show, as well as a Bitcoin ATM operator. We'll get right into it because I know we are pressed for time, so I'll ask the panelists to introduce themselves and give a little bit about what they do.
All right, so I'll try to keep it short. My name is myriad. I am principal of Crowdy Advisors, which is a business consulting firm where I help businesses who are, or startups who are just starting out, so registration, getting your tax ID number, some of the basic things. And as you move along, if you're trying to raise money via equity crowdfunding, I help with that. I'm also an attorney of counsel with Cogent Law Group. And there I work on securities matters and corporate matters. So essentially people are trying to raise a lot more money than equity crowdfunding.
Hello everyone, my name is Magadeen Hamid. I am a co-founder of Decentralized DC, where we connect investors, entrepreneurs, policymakers, and developers. And what essentially we're doing is we're trying to combine and create an organization in which the government and other people trying to break into blockchain can rely on as thought leaders and guidance within the space and bring on the Web 3.0 in DC. I'm also starting at Consensus tomorrow as a solutions architect, and I'm a member of Kappa Alpha Psi.
That's cool.
Hi, I'm Gabriel Abed. I started one of the first exchanges in this space in 2013 with a team of guys, and also launched a fund called Digital Asset Fund in 2017. Run a few ATMs and some other trading-based activities of digital assets.
My name is Jamari Peterson. I don't know if this is working. So my name is Jamari Peterson. I spoke a little bit earlier, but my focus has always been around empowerment and around strategy and design. How do you create systems that empower people?
All right.
I'm only here for 10 more minutes.
Yep.
Hey, my name is Samson Williams. Hello, everyone. You can follow me online at Hustle Fun Baby. And if you want to build wealth, my first tip to you guys is act your wage.
Actual wage. Thank you there, brother. All right. So we're going to move forward with a few questions, and then we'll get into questions from the crowd because I know we are pressed for time once again. So the first one I want to pose to the panel, and we can go straight down the line. When building a long-term portfolio, how do you differentiate how long to hold a coin or token?
Ooh, that's a good question. So I think the first thing before you decide to purchase the coin or token, I think you should look into what that coin or token is actually supposed to be doing, because I think that will determine whether it will have value in the long run. And I'm a hodler, if you will. So if I get one, I know I'm doing it to hold it.
I gotta say the most important point of that question was long term, right? Mm-hmm. This is not a short term market. If you're looking for short term, you will lose all your money, period. So that being said, you have to adjust it based on what what you're looking for, period. The fundamentals, the team, besides doing the own fundamental analysis, another aspect that you gotta look into is if you're diversifying within that market. So each coin determines, you have to segment the coins based on what they're worth. And it's a conducive and consistent portfolio balancing. So
Changes a lot.
Yeah,
Absolutely.
yeah, absolutely.
I have a different take. So I'm a Bitcoin maximalist. I think that everyone in here should understand that Bitcoin is the most important digital asset that we have. It's backed by the most energy. Everything else is based on the principles of that. We are all in this space because of one core principle, and it's called immutability, the ability to not delete, edit, forge, or destroy information. And having an energy-based system backing that is critical. Bitcoin is king. So at least 50% of your portfolio should be Bitcoin. The other 50% could be shitcoins. With regards to the altcoins, what I look for is math-based. You know, if you're going to be a security, be a security. If you're going to be a token-based economic principle system, then be exactly that. So we look for protocols that make sense, and what this means is the innovation in mathematics, and that is where you should be investing your money, because that's where the biggest protocols, if you look at the top 10, they're decentralized, truly decentralized networks. So I'll just leave that there.
Yeah, for me, the way I kind of pursue my trading digital assets and wealth building is I focus first on the security assumptions. I do want to understand like how robust is this network? Like, is it going to get hacked? I mean, how likely is it to get hacked? Is it a 51% attack, or does it just need 33% of the people to actually vote incorrectly to actually cause the chain to have issues? That's my first thing. Then I look at, do I believe in what the work is doing? Because if you believe in what the work is doing, you're going to be an active participant in the network. And if I'm willing to be an active participant in the network, then that has value to me. And then I hold on to those until I use that value for that reason. So I don't typically sell my coins for like any other reason except for to actively use them. Like if I'm buying something, I'm going to buy it directly with that coin at the value that I needed it at. And for me, that's actually building the network and building what I believe in. Because for us, especially from the perspective of the Black Blockchain Summit, we should be participating in networks that we believe in corporately together. So as we can build the wealth and build the actual value of those chains, not just trying to shotgun everything, because that's the way you lose. Mm-hmm. Now, I mean, Bitcoin is one. However, there is other monetary policies. And I think it's about finding something that fits your need and making sure that there's the proper network effects to support. When I say network effects, make sure there's sufficient people that share your belief in that product to actually utilize it in the way that's necessary. And if you have enough sufficient people and it's a critical mass, that thing will thrive regardless, because it's not really always about the coin market cap. It's about the ability to actually actively utilize that coin for its purpose. Like, for example, we was talking about the Brave token earlier, which is part of the BAT network on Brave browser, which blocks ads. That's value. Like, but blocking my ads, I would use a token for that. So therefore, I'm going to use that bad boy. I'm going to buy it. I'm going to use it. I'm going to hold it. But I'm not going to sell it because I'm going to use it for the purpose. I mean, so that's how I use it. Earn actually gets you Bitcoin. That one's for email, mm-hmm. Like, and it can block spam. Like, I use my Bitcoin in that one to send people emails that I don't have contact information for, and sometimes they cost me $20 to reach out to. Some cost me $100. I just use the Bitcoin that I gathered from doing random spam emails every once in a while on Earn. But I use it as they're designed, and that's what I use because I believe in it, and that's the way that I'm building mine. Well, that's what I've done so far, at least.
That's all good. Thank you, brother.
Thank you. Again, Samson. One, ICOs, cryptos, are not your only digital assets. I buy and sell domain names. They're digital assets. So if you go to samsonwilliams.com, that's one of my first digital assets. Secondly, if you're going to trade cryptos, you should be prepared to get divorced, break up with your loved ones, explain how you spent all your rent money. It's super fucking risky. Jamari said it earlier when he was saying that it's based on faith. You're all sitting at a poker table with me. You guys don't know we're playing this game. I'm playing Texas Hold'ems with your emotions, and I'm crushing it. And so you need to be aware of that as you're going to, quote unquote, trade digital assets and trade cryptocurrencies. It is a very volatile market because until the cryptocurrencies have an actual use, they can be used in a marketplace or an ecosystem, you're basing it on faith. And let me tell you, there is a lot of volatility in faith. And I love it as an anthropologist. I like watching the humans go out and show their conviction with their dollars, because I am shorting you guys all the time.
Oh yeah, thank you for that. And to piggyback off of that, I do share your sentiment where you say you should basically take the approach that it is based off faith if you don't actually have something behind it. I will say that I started in 2013, but I didn't trade really until 2015, simply because my mentor, who I was with Stocks and Forex before, he said markets aren't going anywhere. And for most people who start, they see the growth and they jump into it, and what happened to my money? It's simply markets aren't going anywhere. As long as there are markets, there's ways to make money. And with that, I want to get to the next question. What are the most important steps to take before trading digital assets, and what resources can people use to educate themselves?
You want to do that? Sure. Oh, because it seemed like you. Go ahead.
No, it's just really interesting. But the most important thing a person could know when trading digital assets, or rather when owning them, is that if you don't control the keys, you don't own the coin. Mm. So if they're on an exchange, expect to be hacked. Expect someone to steal your coins. That's rule number one. Rule number two is when you are actively trading, only put onto the exchanges what you're willing to lose. Trade, then get the hell out, move your coins back offline. And one of the key principles is always make sure your security standards are in place. The last thing you want is that your two-factor authentication, and if you don't know what 2FA is, Google it, figure it out, and activate it in all your trading accounts. So keep your security at your high standards, ensure that your coins are kept offline, and make sure you're generally protected by being smart. That's all I'll start by saying.
I'll add that, just to piggyback back off of that, that it is a long-term investment, right? So you don't want to put, you have to put in money that you can afford to lose. You can't, that you're not going to miss it, that if you don't see a return in 6 months, it's gonna, bother you. So that's part of why I don't do that much trading, because my nerves can't handle it. So you also have to realize what your investment strategy is. Not everybody can be trading every day or anything like that. There are people who have these bots who kind of tell them when things are moving up and down, and then the bots help them trade. That's another way to do it, to kind of keep some sort of a insulation between you and having to be on the computer all day.
Thank you for that.
Just to add, when it comes to trading with bots, the social sentiment, the factors they're looking at for what's happening on Facebook or Twitter, it is influencing the quote-unquote value of the price of the token or digital asset that you're considering trading. So if you see something trending on the news and you think, oh, I should get in, someone else, a good old-fashioned pump and dump group might have started that out just to get everybody involved in that. And so I personally don't recommend being a day trader for any reason, because the high frequency trading bots and the AIs and the machine learning behind that, they create systems where if you're not comfortable with playing poker, you're always gonna lose to the house. And because I see the good folks from DISB, Department of Insurance, Securities and Banking, I'm gonna be sure not to say anything that get me in trouble.
Thank you for that. All right, so I'll pose one last.
Just before we go on, there's something very important to note, is that no one knows where this market's going. No one. Not even the bots and the algo trading that's set up. Day trading is fun, but ultimately one of the smartest things that you can do in this field with a deflationary asset like Bitcoin is average cost buying. Just every month buy what you can afford to lose. Take positions every single month, regardless of where the price is. If the price of Bitcoin is $1, you're buying $100 worth. If the price of Bitcoin is $10 million, you're buying $100 worth. It doesn't matter. Just there's in this system, because there's continued utility and continued economic growth, you're going to see upward rise of this deflationary asset called Bitcoin. So from the perspective of hodling, it's really horrible financial advice. You shouldn't be holding assets that are falling in value. Bitcoin it breaks all those principles. So the HODL statement holds true to that. So I'll just leave you guys with that. I can't speak to the other cryptos and holding those in a long-term strategy, because some of them have unrealistic evaluations.
Right.
The market, the reason we're seeing a massive correction, it's still not over, is that these unrealistic valuations are based on hype and fear of missing out. What the blockchain offers is quite intuitive and innovative. And if you really want to get the best of that world, just invest in Bitcoin, what's known and what's safe, and what really does have a guaranteed future.
I just want to add a couple things. First thing is, when we're trading digital assets, the idea is to build wealth. You want to make money, right? In order to make money, you have to really know yourself. You have to realize your risk potential, your risk averseness, and then you really have to realize that it's a market that really tests you. It's like playing poker for the first time, if you will. That being said, an actionable item that I would say after, in addition to dollar cost averaging, would be starting off with a smaller amount, putting it in something like $10, $20. Put it in for like 3 months, watch your portfolio go up and down, so you can build that temperament and build that resilience to the volatility of the market. And once you realize that and you understand that, then you can start putting in with more weight.
Thank you for that. All right, so one last question before we allow questions from the crowd. Since we're talking about wealth building, what or how can retail investors build generational wealth through trading digital assets?
Okay, well, I would. So the 10 best days in Bitcoin's life in a year, if you miss those, then you missed the bus. So day trading, it assumes that you're going to make a percentage on your activity, but once again, Bitcoin defies a lot of rules because of its principles and its design, and the fact that it's an open system. So for the retail investor, you can day trade stuff on news and pace driving. And, you know, I run a fund, and we have day traders all day, every day in Australia that look to invest in different protocols, and they look to see what's going on in the charts and what makes sense and where the market's going. And that stuff isn't fun. You become a skeleton staring at a screen and staring at charts, and everyone can do it. It's not without, everyone in this room can day trade. It's not something that requires, you know, to be an economist or a mathematician. But in just once again, with regards to Bitcoin, the better strategy is to consistently buy. I'm not an investment advisor, by the way, so take everything I'm saying with a pinch of salt, and buy Bitcoin.
I will say that, as you can see, that everybody has their way of how they invest, et cetera. So there's not just one way to do it. But I will mention that Bitcoin is also has a limited supply, right? So to Gabriel's point, if you don't have to have a whole Bitcoin, you can have pieces of it, or, you know, Satoshis, as you will. And you could also own pieces of other alternative coins to kind of build up your portfolio. But one thing that I want to say, because I know we're going to run out of time, is that oftentimes I think we think that money or wealth is money and that money equalizes everything. And I think something that we should take away from this topic is that it's not, wealth is not always about money, often because it's more so about the assets that you have that have the value, right? So it could be digital assets, it could be property, it could be stocks, it could be bonds, et cetera. So when we think about wealth, I think we should see it as a grander scope of what wealth would mean for our community.
I hang out with Maureen because she's still in my thoughts. One, crypto never sleeps, so you're always competing with traders around the world. It's not like the stock market closes at 5 o'clock. So if you're not good at poker, I don't advise doing it. Online gambling is illegal until you get on an exchange. If you want to create wealth, buy yourself a multifamily apartment complex. That's like one of the best, easiest, because no cryptocurrencies exist. They're a part of your portfolio. They probably shouldn't be more than 1 or 2% of your overall portfolio, if that much. Because again, if you're day trading, you and me are gambling online, and I'm telling you, I'm winning.
And not only is he winning, but the algorithms are winning too.
Yeah.
Absolutely. Yep. So we'll open it up to the crowd for questions. I'm not sure if we have a mic to hand to you.
Hello? I found a microphone.
Thank you. Thank you for the panel. So I hear people suggesting to buy Bitcoin monthly. If we're talking about wealth as a metric, if someone is wealthy, it implies someone is not wealthy. So when we're talking about the unwealthy people buying portions and percentages of Bitcoin, if the price eventually goes up, they're still going to have the same percentage of Bitcoin versus US dollars. And this is where it's like, effectively they're shorting the US dollar if they do that. So how do you have poor people who are shorting their own currency getting into a currency in which they're still going to be...
Because their currency's bad.
Well, yeah, I get that, but I'm saying they're getting into a currency in which they're still going to be proportionally not wealthy. Because again, the issue is that...
if you're holding an inflation-based asset that's losing its value every single year guaranteed, and that man can keep printing, then you're in no better of a position than you were yesterday.
Absolutely. So what I'm getting at is it's just trading different oppressors at this point, and that's kind of where it's like.
But Bitcoin has no oppressor. There's no CEO. There's no hierarchy. We're all at the same level.
That's true, but there's percentages of people. The Bitcoin concentration of wealth is worse than the U.S. dollar in terms of the 1%. So how do we reconcile that? And how do you say that these people who are going to be buying currency are going to be escaping the 1% when the concentration of wealth is actually worse?
Because the people in the 1% of this current field can keep printing to be that 1%. The people in this world, the Bitcoin world, when they sell, that's it. You can't print anymore. So, and then that concentration you're referring to, 1 million of those tokens is owned by Satoshi Nakamoto, who we don't know if he exists to this day.
I get that, but that is all assuming that everybody goes Bitcoin. So this is kind of where it's like that scenario is a very special scenario that you're presenting.
Good money drives out bad money, and it will eventually get there.
That's not ideal money. Ideal money is backed by goods, commodities, and services. So this is
don't
where
use
it's
cash
like,
anymore because it's not back.
I'm talking about ideal, not versus good,
But
and this is bad.
Bitcoin is more money than the US dollar is, and that's a fact. It's not up for debate. It's a fact. And it's backed by something. It's backed by energy. A lot of it. It's backed by community. It's backed by global trade. There's no borders here. This is the internet currency.
But I think the point of his question, and please correct me if I'm wrong, the point of his question is if you already start off with a small amount of wealth and you're putting your money into a piece of a pie that you're still going to get a proportional amount, right? How can you build wealth off that?
And the point behind that is that you're investing. If you have a position of 1 and you continue to keep that as a declining position, you'll never get to 2. But in this field, when you start to invest in a deflationary asset, it has better growth structure for you than not investing. So the 3 things that I love are things that only God can create: land, gold, and Bitcoin. All 3 are deflationary assets.
So I
Now,
will just
that
say-
sounds like an oxymoron. Now let me define
We're gonna get
why.
Maureen in there.
Hey, well, let me bring it back down to realism. It's computationally not possible right now without a 51% consensus to create more Bitcoin. You can't go and print more gold. You don't have enough energy, and you can't create more land. These are deflationary assets. And the only reason that
That's not true.
that's not true, and they're peer-to-peer pools. And,
No, it's
and, all,
about- it's
and you
about
know what?
18.
At the end of the day, all they can do is delay my transaction. They can't thwart it forever. So, and ultimately, on top of that, there's always breaking the glass scenarios. Luke Dash Jr., one of the core developers, now this is where we're getting nerdy, built in a breaking the glass to move to proof of stake if we needed to. So it's not, no one controls this field and no one has absolute God mode over it. And it's way better and superior than losing 6% a year on holding on to that horrible system called fiat.
So let me just
Yeah,
interrupt you so
yeah,
we can get to our next
I was
question
gonna
right
say, we
quick.
can get to the next one. Sorry.
Hi. Well, it's a combination question and point to address him. He's talking about the transfer of wealth, and I see this kind of get danced around. Bitcoin is not the builder of wealth. What has built wealth is that people have built industries on top of Bitcoin and created other coins, and they have created whole other economies and built wealth for themselves. So that's what has built wealth when it comes to blockchain. Of course, there are people who have made money off of Bitcoin, and they're on the top percent, and yes, they are the ones that, you know, they're not us, but there's a whole, I feel like there's a whole big silent elephant, and that is, of course, all of the companies that have raised millions and millions of dollars on ICOs, this, that, and a third, and those are the ones who have tapped into this quote-unquote wealth transfer. So they're building their own products. They're building their own blockchains. That's how they're benefiting. And that's where the transfer of wealth comes into play, because now you have a tool to be able to create wealth or create money, because that's what they're doing. They're creating money.
What do you mean?
Thank you, brother. If I create an ICO, right, let's just say I wouldn't do this, but it's a vegan coin. And most of the people who create these ICOs, they're asking you for what? What are you paying with?
Bitcoin or Ethereum.
Yeah.
Litecoin.
So what my point is, like, people are saying that, you know, these other ICO companies are building these wealth gains or whatever have you, but they created it from their own, right? Even if it's a scam, they created it. But for them wanting Bitcoin, they want your Bitcoin for the ICO. 9 times out of 10, the ICO holds no weight for the Bitcoin. So basically, well, in my point of view, ICOs end up playing another level of a scam just to get Bitcoin out of you.
You're right. But they use that Bitcoin to fuel their industry, right? To fuel their development, to pay for their marketers and all that good stuff. Sorry? Oh yeah, absolutely. That's what they want. They're trading your Bitcoin for their coin, right? And their coin might not be worth anything later.
Okay. All right. Well, we're gonna move forward to our last question right here.
Okay,
yes,
so
ma'am.
this is just like the skeptic in me, but also in an earlier earlier panel, someone said that this system is planned, and they plan 50 or 100 years in advance. And we're talking about the transfer of wealth. Something that comes to mind, it's like, okay, we don't know who or what group is Satoshi. Is it a possibility that Satoshi is just the government? And if so...
Very much so.
And if
Great,
so...
stop. Hold on, guys. Don't applaud to that yet. It's not necessary.
Is it possible that Satoshi is just the government? And if so, how can blockchain technology be a Trojan horse being used to recolonize us?
Okay, so I've had this fear many a night, and I've stayed up wondering if this was the CIA, the NIS, was this Bill Gates and his team? Who is Satoshi Nakamoto? And the answer comes back to the system was designed with openness in mind and with all of us in mind. And in essence, we are all Satoshi. And what I mean by that is this open-driven consensus ledger system. You can wave your hand all you want in the back and say not, but you know what? Physics drives the system. Physics drives this. And no man's in control of that. And what stands forward right now, SHA-256, the proof of work process, whether it's centralized or not, the process here is a consensus-driven algorithm that if they did design this and they want to create a George Orwellian 1984, this is not the system to deliver that against. And they've completely lost the plot when they went and made this a decentralized system using known technologies that we've had for years. Maybe there is a backdoor to it, but there are so many other algorithms and litmus tests that we've created, from X13 to Ethereum, you name it. There's so many variants of it out there. But ultimately, if this was their plan to take control, they fucked up.
And I guess I want to just reiterate my point that that wealth can be built in many other ways. It doesn't have to just be through digital assets. But the other thing I would say is that, to Tavana's point from Gotcoin, that a lot of the projects are built on top of, I think we stick to Bitcoin, but the technology is really what's going to, revolutionize things. So whatever you're building on top of the technology, in terms of, whatever your project is and the income and the wealth that can be built from that is what I think we should be more concerned about.
Well, I'd like to thank the panel for joining us today. Thank you for your questions.
Thank you. Can we give them a loud applause? That was great.